All right, so just wanted to give you, this is like my third take. I wanted to give you a glimpse into the way I think and the way that I take setups and the time frames. Time frame is really important because you want to capture the period of time with the most volatility. When you see we see 573, and I knew that we should have a sell off today into this gap up because look how much we gap up from 568 all the way. So we gapped up 5 points. Under normal market circumstances, we're going to be filling gaps. Now, let me go back a while and show you how abnormal the market has been trading. Okay, so let's take for instance right here. This gap right here never got filled after Trump paused the tariffs. Look what happened. We went from 448 and gapped up to 450. It just doesn't happen without a retrace. Okay, we did it again. Actually, it filled the gap here a few days later, but there's still a gap that took days to fill. Then we gapped up again from 495 to 500, right? We gapped up again. I guess you can call this filling the gap, somewhat, but look how long it took. I mean, the market kept rallying, and we barely filled this gap. All right. Now look again, 532 all the way up to 536. We still haven't filled this gap. And then we gapped up here, but again, we filled it. And now we're all the way in August. All right. So, therefore, we get a gap down last Thursday. So we gapped down from 565 all the way to 558. All right. We immediately in one day fill the gap between Thursdays and Fridays gap. Okay. Thursdays and Fridays price action. All right. So let me take this. This is just what I drew. And we actually hit the targets. But I'm giving you my philosophy so that you can know how I think in order to look and try to capture some success in the market with some methodology. All right. So today, again, I called this and we said, you know what? I think we're going to have a short day. I said we'll probably be short today. We'll see. I'm just watching for now. The next thing you know, an hour and a half goes by. I wanted to catch the top. I missed the top, right? But I got in puts anyway. Puts printed like 113% until it pulled back and then we got out. All right. So then at 243, the last 17 minutes of the market, I said I got into a quick call position. I wanted to see 563, maybe 570. I bought the options and completely forgot that I bought them and looked up 2 minutes later. And I mean, not 2 minutes later, 2 minutes after the market closed, and they were in the money. All right. I cashed out. I'm doing a small account. I'm back doing a small account. Again, it's not a challenge. I'm just back building up a small account. So that was good. We actually did get to 570. We got to 569. And then we ended up getting to 570 later. Now, back to today, what happened and why we choose these setups. Whenever we gap up, we should get a gap fill, okay? We gapped up from 568 to 573. We went ahead and filled. Now, my put should have printed more. I think I got stopped out right here. We went from 566 all the way to 568. I got stopped out, and then the market just went all the way down to 565, which sucks because we figured that was going to happen. But now, okay, one of my other rules is when I get stopped out in one position, I take the opposite position, okay? You don't want to do the same thing that's not working. You want to do the opposite. Sometimes you can buy back in and it works because you got stopped out prematurely. But a lot of times when the move is over and it reverses, it's done. So again, we're at 430. 430, we finally hit a bottom at 565. Now I knew if we don't break lower from 565 any more downwards, then this is probably a bottom. Now, the thing that you have to see sometimes, whenever we have a bottom, a lot of times we will end up retracing. All right. So it doesn't look like much, but this little move right here will show you that the market is about to go the opposite direction. So what I mean by that, we hit the bottom, boom. Now, a very powerful candlestick is when we get a red followed by a green, solid green candlestick. That's normally the bottom. There's another one right here. This red candlestick followed by the same. It's a green candlestick that takes the full body of the previous red candlestick. That's a strong reversal pattern, okay? So once we break out of this pattern, we broke above the last two big red candles right here at 1415, which is 115. We finally break above that. And once we break above, we want to retrace. That's Jesse Livermore. We want to retrace 566, but we want to hold above this last green breakout candle. Once we hold and we don't go break down any further, we can get an explosive move up. You see, we went from 567, we retraced to 566.38, then boom, it exploded, okay, to 569.85. So again, this last 15-minute window, last 15 minutes of the market, this is when the premiums get cheap. This is when you can pay $10 and get $1 out of the money. 4 hours before then, it takes $30 to get $4 or $5 out of the money. It takes about $70 to get $1 out of the money. But guess what? It's like a cheat code because this is when the most volatility is coming in. So you get the most for the very least. All right. Now, again, what our rules are: if we break a low, if we break the pre-market low or the opening low, once we break the opening low, we want to be in puts. All right. That's something that I typically don't reveal, but the levels that we choose, that we have as markers to determine whether we go long or short. Okay, we are going lower. So once we make new lows, we want to be in puts. And again, I didn't catch it. Once we broke a new low, I just got in puts and we got about 100%. But then this last 15 minutes, I knew that even since I got stopped out, if I could catch this right move, because typically we're not going to close all the way at the bottom of the daily low. Even with the gap down from 551, we still close at 554. So I'm knowing, even with this big red candle, I forgot what it's called, Marut something. But it's a candle with a long red body. We still have a wick at the bottom from 564 all the way up to 565, 563.90. So we still rally the point even with the biggest body red candle. So I know if I can time this correctly, from 565, I'm going to get 567, 568, maybe even 569, maybe even 570, and that's what we did. So right here, again, I said 570 would be nice. We got what we wanted, and I mean, it was just a beautiful move. I looked up. It was a nice surprise. But again, I'm risking $10 to get 60 or 70. And actually, those calls actually went to $1 after hours. But remember, on QQQ, on the indices and SPY, QQQ, you can trade 15 minutes after the close. So, of course, again, it just kept creeping up after the close, and it ended up spiking to 570. So that was a great play today. A lot goes into these plays, but again, I still keep it simple for the simple fact that I teach beginners, intermediate, and people who have lots of experience. So like, share, subscribe. This is definitely one of the best moves that we've caught over the last few months, because we just haven't had any volatility. You know, we're looking at I mean, barely moving, just inching up, inching up, inching up, inching up. We finally got some volatility last Thursday, and we've had some decent volatility ever since. So again, if you focus on your rules, I want to trade the first hour. If it keeps running after the first hour, fine, but I don't want to give any money back. Focus on the first hour where the most volatility is. Focus on the last 15 minutes where you can get a big move for a fraction of the price, like this move from 566 all the way to 570. Stick to your rules, put your stops in, and pray. Stay on track, stay disciplined, and you can take a small account like we did a couple months ago, $100, and run it into over 2,000 in 7 trading days just by sticking to your rules. And we left a lot of money on the table. Our account should have been at least $5,000 from 100 in those 7 trading days. But there's a lot to say, a lot to share. Like, comment, share, subscribe, follow me, hit the bell icon, and we will be back. God bless.